Good morning, guys. Happy Friday to each and every one of you. Welcome to the Game Plan. My name is Gareth Soloway here, Chief Market Strategist at VerifiedInvesting.com. So we're going to cover the big PCE data release. We just saw it and what markets are doing in terms of a reaction. We've got lots of stocks moving this morning. We'll take a look at Bitcoin as well as gold, silver, oil, and natural gas. So first things first, let's talk a little bit about what we're seeing in the overall market. So today we just got the PCE data out about 30 minutes ago. The PCE price index month over month for February came in at expectations of 0.3%. The PCE year over year came out at expectations of 2.5%. All okay there. The problem was this: the core was hotter than expected at 0.4%, and the core year over year. So month over month core, year over year core was hotter than expected. In addition, another thing that caught my eye, personal spending, 0.4%. It was expected to be 0.5%, thus weaker than expected. And again, weaker spending is not good economically. It tells us that the overall consumer spending is slowing and therefore the economy is slowing. Now, this is the other kicker, guys. So again, wait, there's more, right? So we've seen a lot of tariffs imposed. This inline expectation, slightly hotter PCE on core, does not include any of the tariffs that we have seen being implemented. And that is the issue here, folks. All right. So again, that is the issue that a lot of investors are looking at. And when we flip back to the stock market, we can see again, this rollover here since the PCE data came out right here, we can see again, markets aren't tanking. I mean, they're not down massively, but again, they are lower and at the lows of the session. As again, what we're seeing is people worrying, and you can see we're down ticking even as we speak. All right. So again, that's your economic news update here as we get into things. And again, a couple other things to take a note on. What we do know from the daily S&P chart, we have again a retrace here into, this would be called the scene of the crime, the breakdown of this low, this pivot point. We broke down here, we retraced, we sold off. And yesterday in the game plan, I said, guys, keep an eye on this gap fill. This gap fill right here will be a test of support at just below 564 on the SPY. So that's going to be your first level to watch today. Now, interestingly enough, if we flip over to the intraday, where are we trading? We're at 564.40. So I would dare say by the first few minutes of the trading day, maybe even pre-market, we're going to be into that level. And then the question is, do we hold it? Do we bounce or do we break? Now, there's another thing I'm keeping an eye on. Take a look at this. You can connect these recent lows here and look at this, folks. This upsloping trend line. So connecting this exact low here to this low here. We didn't get down there yet, but where is that coordination? It's basically right at that gap fill. So you have essentially a wedge pattern that's been building. Now, if we take away the gap fill, let me ask you guys a question here. What type of pattern is this? All right, you have a sharp down move and then basically inside bar chop in the lower vicinity. What we know from technical analysis is that is a bearish flag pattern. So again, I've been telling you all along, everyone else maybe, well, not everyone, but a lot of people talking about, oh, the markets will rally. I mean, you've seen upgrades in the S&P price target, all of this thing from these big players, even Goldman Sachs and other names. I've been saying to you guys, be very careful. This market, again, I just go by a day-to-day analysis. Right now, the markets on this bounce have been weak. And if we break here, we could be not only headed back to the lows of 550 on the SPY, but to our next short-term target, which would be at 540 on the SPY. And eventually, I still think we're going to retest those August lows, which was the biggest correction in the S&P before the latest correction. That, again, was the biggest one in 2024 there. Okay? So, again, keep an eye on 564 today in terms of the gap fill. Also, the upsloping trend line. If we close below it, it could set up a nasty Monday next week. All right, a couple other things going to the NASDAQ 100. Same sort of scenario here. The NASDAQ is weaker this morning, seeing a little selling. Now, overnight, we did see the NASDAQ and the S&P weaker, but we had rallied back towards the opening bell here ahead of that PCE data. Now it's pulling back to the lows of the session. Daily chart of the QQQ, much the same. You got a break of a major line and a retrace back up to it, and now we're starting to dip. The NASDAQ, again, showing additional weakness. Why? Because yesterday it already filled the gap. So the same gap that on the S&P could be filled today was already filled yesterday on the QQQ, mainly because of names like NVIDIA. NVIDIA continuing to show a lot of weakness. Look at this chart, guys. Again, this is not a good chart. Look at the breakdown that has occurred, the retrace. And again, if we go even to a bigger time frame, like you can't tell me this is a healthy chart, the breakdown that we're seeing right here. When you look at a bigger time frame, like the weekly or even the monthly chart, that is not a good break of a trend. All right. So again, while I may swing long or day trade long NVIDIA here and there, I still think, and I talked about this yesterday, that at the very least, it's going to go test the 90 level, which was your August low. But that's probably just a stopping point on a bigger corrective move. Now, having said that, are there interesting opportunities in the land of swing trading? The answer is heck yeah, there are. Broadcom is a very interesting level. Look at this three-peat of trend lines. There's a gap fill here. This is kind of the minor of the three, but then you have a downsloping trend line on Broadcom connecting these lows. Then you have this upsloping one connecting this level right around 167-ish, give or take. That is a huge level. And then one of the other things that I found, so this would be considered a three-factor, but I want to show you one more thing. So we take the low of the kind of the bear market lows on these things, and we do a Fibonacci. And what do we get right at that same level of around 167? This is the 50% fib level retrace right here. So again, you would almost consider this to be a four-factor. Now, is this a long-term investment? Heck no. Remember, I don't deal with long-term investments, guys. I do not. All right. The only way, and I'm going to be dead serious with you guys here, the only way I ever hold something long-term, and I'll talk about gold in this situation, I literally bought some physical gold, because it's such a pain in the butt to go sell that. And they give you basically if you sell physical gold, they're going to give you below spot because there's a spread, right? And so it not only is it a pain in the butt to sell once you have the physical gold, but then they're going to give you lower than spot. I mean, not a ton. I mean, like $20, $30 lower than spot, not a huge deal. But my point being is that's how literally I make myself not sell something too quickly. All right. But in all fairness, that makes me a great swing trader. A great example of this would be Wolf, right? So Wolf, if we go to the charts here, let's bring up Wolf. Wolf is getting crushed today. I actually didn't even have time to look up the news here yet, but I'm assuming it's a warning. The company probably warned. They just brought in a new CEO. He's probably going to clean house. The stock here dropping from $5 and change all the way down to a low of $283 this morning before snapping back here. So this stock is down almost 40% on the day. Now, I've traded this with my members in Smart Money stocks and ETFs 3 times in the last basically 3 months. We've netted probably on average 15 to 20% gains per trade on Wolf, and we're not in it right now. And that's the beauty of swing trading is you get technical levels here where you get bounces, all right? And again, bounce right here. If you can pinpoint the chart, you can play these bounces. But if we're going into a recession, which I do believe, I'm not going to be sticking around on longs long term, right? Doesn't make sense because, again, a recession is going to hurt all stocks, NVIDIA, Broadcom, Wolf, Lululemon. We'll talk about Lululemon. And so, again, we're able to maneuver here, and that's awesome, right? So the last time I exited Wolf was at $6.07 after buying it at $5.36 with members for 13.25%. We did it right over here. I believe we sold in right into here or something. But the point being, actually, it was right over here on this pop right here. In any case, the point being is this is one of the reasons why I'm an advocate of swing trading versus kind of the buy and hold mentality. And it's not that if you hold for 20 years, you probably don't do very well, 20, 30 years. But the problem is human emotion tends to drive us to extremes. And so when people went through 2008, 2009, and I went through this, folks, I traded through this, and it was insane. But people that were long-term investors going into, let's say they bought in 2003 or 2002, and they're like, all right, I'm a long-term investor. I'm going to hold for 20 years. The problem is when they see drops in stocks of 50, 60, 70% or greater, they panic and tend to sell at the lows. And we all know that if a long-term investor held through 2008, 2009, they actually did very well by this point. But the problem is emotion. And this is why I'm an advocate for using the charts to guide us to levels and taking out emotion, being more robotic as a trader, because it actually helps us avoid kind of the panic scenarios. Like if you're a long-term investor, honestly, don't look at your account for 20 years. I mean, really, that's what you should do, because if you look at it, you're going to panic at the wrong times. And when the media is promoting, oh my goodness, look at this financial crisis, like all this stuff, it's going to make you panic and look at your account. And you're going to be like, oh my gosh, you know, I'm down 50% on my whole portfolio. I knew people that had to go back to work. Like they were literally retired. They blew up their retirement accounts. And then they had to go back to work. I mean, it's a horrible scenario, but that's, again, an advocate. That's one of the reasons why I'm an advocate for being a swing trader. All right. In any case, I want to show you guys one level on Wolf that I'm keeping an eye on here. So again, as the dust settles, I will be eyeing this as a swing trade. If we look at this pivot low, right down here around 290, which, by the way, it got to pre-market, but this would be a reattack of this level here. And then again, that would at least give me a technical, and I stress technical reason why I would think about a small position on Wolf. So these are the things that you have to know. And again, it's one of the great things about being a member of Smart Money Stocks is you get my exits as well as my entries, right? So we get in Wolf, we get out of Wolf, boom, boom, boom. All right, going to a few other things here. Lululemon got hammered on earnings. Now, the kicker here on Lulu, guys, is Lululemon is down about 11% this morning. But what do we know about Lululemon? This is a high-end retailer, right? I mean, it's not cheap to buy pants from Lululemon. It's generally higher income people that are shopping at Lululemon. So what we're seeing is a year ago, McDonald's told us people that were making 50K or under couldn't even afford to eat at McDonald's. Dollar Tree or Dollar General was telling us that people were being priced out of Dollar General and not able to shop there. All right, so the low end was hurting. 6 months ago, the middle income starting to hurt, 50s to 100,000. Now you're seeing the higher end pulling back on spending. So this is how economies work, by the way. And I want to be clear on this. If you look at any cycle, who feels the pain first? Is it the guy that has $1 billion? No way. That's like that they probably never feel the pain, frankly. But my point is that the people that make the lowest amount are going to feel inflation first and economic hardship first, then the middle income, then the higher income. That's my point. And so we're seeing that as we approach what I think will be a recession later this year, is that you're now seeing the cycles work through. Now you might say, well, why didn't we have a recession a year ago? Well, when you have the Federal Reserve still invested as much as they are, even though they've been tightening, their balance sheet is still $7 trillion. When you have government spending out of control, it's a stimulus. And I was just talking about this with my traders in the day trading room out here. We have an awesome trading room, by the way. I know some of you guys want to come trade with us. We can look into that. But the point being is that you essentially have a scenario where you have the economy at a point where it will roll over. But when there's so much spending going on, it keeps the patient alive, right? It's a matter of, you could have someone that if you took life support away in the hospital, they would pass away. But if you keep that life support, or if you keep them on their drugs, they stay alive. Not necessarily in a healthy state, but they stay alive. And in my opinion, that's what we've been in. We've been in this artificial expansionary period because there's been so much liquidity or stimulus injected into the markets. All right, let's get back to charts. We have the Lululemon chart trading just above 300. That honestly only takes us down to basically this pivot low here. We're actually right here. So aggressive traders, I'm not going to play this, but there is an aggressive level here at 298. That would be your first level. Instead, for me, I'm going to look and I'm going to say, all right, there's a level right in here, right around 275 to 276, high pivot, pierced it here, kind of closed above, but then rejected. Then right here, I can zoom in a little so you guys can see that. See how that kind of is a level right there? So again, if it got down to like, let's say 277 to 275, I think for me, that would be an interesting opportunity there. The only other thing I would say too is look at this. So again, this would kind of be an additional level. It's a little bit above it, but if Lulu came in, I mean, if you were really aggressive, maybe 285 right here as a down sloping trend line there. All right, APP, we got to talk about this one. This one's pretty wild here, folks. So again, APP, yesterday afternoon, the short sellers fund Muddy Waters came out and basically bashed them again. The stock dropped 20% into day end. It was insane. And now we're seeing a snapback as the company is defending itself. But basically, Muddy Waters was saying they essentially AppLovin muddies their stats. They're not really real perfectly done stats, and therefore the company is being shady and, whatever. As a trade, it's already bounced, so there's not much we can do. If this were to flush back below 250 early in the day, I might be interested. But again, it's more of a news story that's kind of just fascinating. This is one you can see it had a gap up here on earnings. Then obviously tech started to sell off. It came in here. We actually bought it in smart money stocks. We played it up here. We took profits. It went a little higher. I was going to reshort it. In fact, I've highlighted it in this broadcast of Game Plan to reshort at this level. It never got there, and obviously the dump yesterday. Would I buy a buyer here at 227 on a swing trade basis? No, but it gap fill down here. Heck yeah! If it gets down to 175, I'll nibble. Absolutely. All right. So those are some trading opportunities for the day, folks. I do want to flip over to Bitcoin. Let's take a look at Bitcoin this morning. This is problematic for Bitcoin, guys. All right. So listen, it hasn't confirmed a breakdown yet. Let's see where it is by the end of the day. But you had a wedge pattern here, down sloping line, up sloping. And again, it's starting to break here. Let's see where it is. But my concern is that we all know in general that support is down here at 74 to 72,000. It hasn't hit that yet. Generally, support needs to be tagged so that it can bounce and form a new bottom. That hasn't been hit. That's problematic. I still think it's going down here before it has any chance of a significant potential bottom. And even then, we'll have to reevaluate based on the stock market. All right. Gold. Gold did it fantastically yesterday. It is up again today. Look, it's piercing this upper trend line right up here. We only got a minor pullback, but we're right into resistance. I'm still going to stick with my call that we are due for a pullback in gold back down to this level here at minimum. So far, we only got a minor pullback and then a move up, but notice how it's reacting again. Look at the pierce and the rejection so far. So I'm going to keep a very close eye on this. Now, again, I obviously have my long-term gold holdings, so that's awesome, but I'm a swing trader too. So I want to swing trade it short and then have my long-term holdings in gold go up over time. That's perfect for me. Next up, let's take a look at silver today. Silver having a little bit of a pause day today. It did have a good move yesterday. Resistance remains just below $35 per ounce. And then I'll talk about palladium because I highlighted this as one of my top positions earlier this week. It was $1 million plus position. And we can see right here, it is continuing. Since I highlighted it on, I think it was Wednesday, it's continued to move up. It's just potentially breaking out of an inverse head and shoulders here. We have the bigger wedge pattern that is broken out as well. So I still think there's a lot more upside, but so far so good on palladium. Next up, let's take a look at U.S. oil. Oil, again, if we flip over here, oil is very close to that target. I would even say it's you could consider this an in spirit of touch. I am not short yet on oil. I'm kind of just hoping we can make one more little push up. Maybe I'm being stupid by not just taking a small short position now on it. But again, I don't mind if I miss this trade because, again, it has a lot of support still down here. But if it got up a little bit more, let's say 70.5, I probably would nibble on a short. And then we saw natural gas bounce beautifully off of the technical level I've guided you guys to right here. Again, this is only a short-term support. I expect it to bounce up a little bit and then roll over and probably come down to this longer-term trend right down here on the charts. All right, going back to the S&P, let's see where we are. Ooh, the S&P just got a big bounce here pre-market. How about that? So something is going on here, folks. Maybe tariffs, maybe again, this is what's wild about this market, folks, is that, and by the way, we're basically back to the flat line on the day. So it's not like we're having a huge move. But the kicker is this, is that because Trump is imposing these tariffs, we saw auto tariffs yesterday, right? There's always a chance that he says something like, oh, well, I might pull them back or I may do this. And if that happens, the markets can rip on a dime. So, I mean, this is a trader's market and a swing trader's market, but it is a tough market if you're just watching this day by day and you're like, oh, PCE is sending us down. Oh, look, we're just ripping up to the upside now. It is what it is. It's why, honestly, I'm going to swing trade this market till the cows come home and day trade it the same way. It's a great market for that. Come check us out, but guys, by the way, listen, data and analysis. I try to keep all my emotion out of it. Emotion, the only thing emotion has done in my trading is screw me up. And I think we can all agree on that. I'm sure we've all had that feeling where we FOMO in, right? We see something ripping and we jump in and we just jump in at the freaking top, right? Or we see something dumping and we panic. We're like, oh, we can't take the pain anymore in this position. And we dump it and then it bounces like 30%, right? Always happens. It's the way it is. Get that emotion out. The way you do that is by focusing on charts. All right, guys, you are awesome. Thank you so much for coming out here and watching this game plan and supporting us here at Verified Investing. I'll talk to you later. Take care.